It is almost midnight, and I am sitting here thinking about a number that changed my life. Not the $100,000 I saved by age 26, but a much smaller number. It was the first dividend check I ever received. It was only a few dollars at the time. I felt like a failure because my friends were bragging about 50% gains on tech stocks and crypto coins. I felt like I was moving in slow motion. I remember looking at my screen and thinking I was a genius for a moment, then realizing it was just a hallucination before the market hit me. But I stayed with it because I realized something most people figure out too late. Wealth is not about the peak of the mountain. Wealth is about the floor beneath your feet. We need to talk about why people are wrong about dividend stocks. If I had to build wealth from zero again using one simple filter, I would not start with hype. I would start with companies that have paid shareholders through every recession and every inflation spike. I would look for the businesses that kept paying when rates went through the roof and markets crashed. This is not because dividends are magic. It is because dividends tell us something very important about a business. Let me share a fact that most people never hear in the news. Nearly 60 years of market data shows that high dividend stocks do not just beat low dividend stocks. They even beat the full market over the long run. This is not an opinion from social media. This is academic research. Researchers looked at the top 1,500 U.S. stocks by market cap from 1963 through 2021. They split them into two groups. They had the higher dividend group and the lower dividend group. Then they tracked the total compound returns over that entire period of 58 years. The result was not subtle. The high dividend group did not just do better. The gap was massive. $1 invested in the high dividend group grew to roughly 10 times what the low dividend group produced. When someone tells me dividend stocks are boring, I have a very simple response. Boring compared to what? Losing money. I will take the money every single time. Boring money is better than losing money with excitement. The researchers were not saying the cash itself was the secret sauce. Their conclusion was that the performance came from the type of companies that pay dividends. These are high quality and profitable and stable businesses. These are defensive businesses. That is the whole point. If dividend-paying companies tend to be the kinds of businesses with stronger discipline and stronger cash flow, why would we ignore them? This is why I use these types of stocks as my first layer. I call this the infinity investing framework. I am not chasing excitement. I am building a cash flow machine. You might hear people talking about the 4% rule all the time, but you should ask them a question. Why would you buy something with the expectation that you will be forced to sell it later? If you are forced to sell, you might be forced to sell at a bad time. Ask anyone who retired in the year 2000 or 2008 how that worked out for them. It was a nightmare. After looking at the data, I have come to the conclusion that being forced to sell is a position of weakness. I want to live off the income my investments produce. I want dividends and premiums and interest. It does not matter to me as long as I am not forced to eat the golden goose. I just want the eggs the golden goose lays. Most people are taught to chase appreciation first. They think they will worry about income later. They build portfolios that look great on paper, but when the time comes to live on that money, they have a problem. They have to dismantle the machine. I do not want to build a pile of assets just to slowly liquidate it. I want assets that kick off cash while the pile continues to get bigger. I want to get paid while I still own the company. The truth about dividend stocks is that the business behind the dividend is what matters. A dividend does not make a bad company good. A high yield does not make a stock safe. In fact, that is where a lot of people get hurt. They hear about dividend investing and they immediately look for the highest yield they can find. That is not a strategy, that is yield chasing. Yield chasing is how investors walk straight into a trap. If you see a stock paying a 10% or 12% yield, your first question should not be how much income can I get? Your first question should be what is broken here? The market does not hand out huge yields for free. Sometimes the stock price has collapsed because the business is dying. Sometimes the payout is not sustainable because they do not have free cash flow. The yield is just the bait to lure in investors who are desperate. In my framework, the dividend is just one filter. I want quality and durable revenue. I want strong businesses that people still need when the economy is falling apart. I want discipline in management. I want a reasonable valuation. I actually use 7 criteria for any stock I buy. The dividend is only one of them. I am not even looking for the highest yield. I just want it to be at least 2% and sustainable for at least 10 years. I am buying quality companies that happen to pay me while I own them. This is why I start with stocks instead of real estate. I love real estate, and it is my second engine. Real estate gives you leverage and tax advantages, but real estate is operational. It is less liquid. It takes more involvement. Just ask anyone who bought a property and had to replace the roof immediately. Stocks are cleaner and they are liquid. They are easier to diversify and easier to automate. If you build the right portfolio, you get a growing stream of income without a midnight call about a leaking roof. After stocks and real estate, I look at managed portfolios and ETFs. These are areas where I allocate capital to systems designed to produce returns without my personal involvement. Then I keep a reserve of about 10% in cash or cash equivalents. This could be gold or silver or even a bit of Bitcoin. I do this because markets change and opportunities show up. Volatility creates openings and I always want some dry power. This is how I think about building a real financial life. It is a system. The stock portion of that system needs to throw off cash. I think of it like this. If you had $1 million portfolio that allowed you to retire and never work again, would you care if the value went up or down by 40%? If the income stayed the same, the value is almost a distraction. The goal is to have the portfolio do the work for you. The best version of this is a stock that pays you today and has the ability to pay you more tomorrow. When you own a company that consistently increases its dividend, you are buying inflation-protected cash flow. This is how a portfolio becomes an engine. Look at Warren Buffett. He did not become the best investor in the world by rapidly buying and selling. He became the greatest by holding investments that kick off so much cash that his biggest worry is where to spend it. When you layer in reinvestment and tax awareness, you have something powerful. The return is not what you make, but what you keep. The chart shows what the market delivered, but your system determines what you actually keep. This is why I do not isolate one asset class. Stocks are the first engine. Real estate is the second engine. Managed strategies are the third engine. Reserves give me stability. Put them together and you are not depending on one thing. You are building multiple streams of cash flow. That is real wealth. Most investors skip the core and jump straight into complexity. They chase growth and appreciation because it feels fast. They buy complicated things because it feels sophisticated, but simple things done well will beat complex things done badly every single time. A portfolio of high-quality businesses is not flashy, but it works. If you build that first and then add real estate and managed opportunities, you are doing what most people never do. You are building a repeatable system. So when people ask me why I like dividends, the answer is simple. I like getting paid. I like owning businesses that give me cash. I like building income without having to sell my assets in the future. I do not want to follow a rule that tells me to kill my golden goose. I want to use stocks as the cleanest engine in a much bigger plan. They are exciting because used correctly, they become the foundation of a life where your money works harder than you do. I remember sitting in my college dorm in 2020 thinking that the world was ending. I saw people panicking and selling everything, but then I saw the companies that kept paying. I saw the strength in the balance sheets. It was a lesson that no textbook could ever teach, as well as reality. At age 26, I realized that my time is the most valuable asset I have. I do not want to spend my time staring at red and green candles on a screen all day. I want to spend my time living and building and creating. That is why I choose the boring path, because the boring path leads to a very exciting life. If you're 22 or 25 or 30 years old, do not feel like you are behind. The race is only with yourself. Every dollar you invest in a quality business is a worker that never sleeps. It is a soldier that fights for your freedom every single minute. If you can just stay disciplined for a few years, the math starts to take over. The compounding starts to feel like a heavy weight moving downhill. It becomes inevitable. I used to think I needed $1 million to feel safe. Now I realize I just need an income stream that exceeds my expenses. That is the true definition of a rich life. It is not about the car you drive or the watch on your wrist. It is about the fact that you do not have to ask anyone for permission to wake up at noon. It is about the fact that your mortgage is paid by a giant corporation in Ohio. That is the dream we are building together. I want you to look at your portfolio not as a lottery ticket, but as a farm. You plant the seeds and you water the soil. You do not dig up the seeds every day to see if they are growing. You wait for the harvest, and if you choose the right seeds, the harvest will come every single quarter for the rest of your life. If you know someone who is still chasing hot stocks hoping for a miracle, share this with them. Drop a comment below and tell me what companies you think belong in a real cash flow portfolio. Tell me your favorite ETFs that produce consistent cash. I put new videos out every week on investing and tax strategy and legal moves to help you keep what you build. I have 2 free things for you today. First, I have a link for my book on infinity investing. You can download it for absolutely free. Just type free book in the comments and I will send you the link. Second, I want to help you protect what you build. We teach a free class on tax and asset protection. Almost every Saturday, we have been doing this for 30 years. You can join as my guest. I will put the link in the notes below. I will also put another video on the screen that you should watch next. It went viral for a reason. Check that out and stay disciplined. God bless. We are building something that lasts. We are building a machine that gives us our lives back. And that is the most exciting thing in the world. I will see you in the next one. The journey is long, but the destination is worth every single boring step. Keep your eyes on the numbers and your heart on the freedom. It will happen for you if you let the math work. Good night and good luck with your investments. Remember that patience is the only true competitive advantage left in the modern world. If you can wait 10 years, you can beat 99% of the people out there. That is the secret. That is the truth about building wealth. See you soon. Peace.